I think what we're seeing is kind of this year's winners have become this year's losers, and especially in financial, some of it was overdue. And I think the move we saw in the 10-year felt extreme, and the banks kind of followed suit. So it's nice to see some of the get back here. I think what can it continue? The question becomes, can we get some more fundamental macro support behind it? I mean, I think banks were oversold. But to start saying we're going to have a lot of upside from here, it's a little more difficult when you're still looking at a 10-year, well below 2%.
Craig, I know you've said that you think, people are overly obsessed with the impact low rates have on the banks. But just this morning, UBS downgraded Wells Fargo, saying a primary reason is they think they're going to have lower net interest income over the next couple of years.
Well, we are lowering our growth rate expectations for banks. Some of them are growing at double-digit paces the last few years in their earnings. So we've lowered that, but we still see them growing. We still see them profitable. Interest margins have been quite steady over the last 5 years. So we still like banks and find good value there.
Why do you think they can make money? Do they just base off a different kind of spread than the 2-year, 10-year, for example?
Banking's pretty simple. Bankers are very good at taking money in at one rate, marking it up about 3 percentage points, and loaning it out. So they can do that in their sleep, I think. They're very good at it.
Do you, Craig, have any thoughts about this shift just this week, which I know is in its very early phases, but was kind of extreme? All of a sudden, bond yields started creeping back up. A lot of the tech momentum plays, software names, that sort of thing really took a hit. And we have financials and energy gathering some strength. Do you have any advice for investors about what this means, if anything?
At the low, we saw bonds as very expensive and stocks as cheap, and we still see that relationship. So the 2-year or the 10-year yield, where it is, given where inflation is, just looks irrational to me.
Wow. And Jeff, and when it comes to the banks in particular, how cheap would you describe them?
Well, they're a lot less cheap than they were last week, but they're still pretty cheap. The operating environment is tough, so it's not like banks are going to go to all-time high valuations. But outside of the interest rate environment, things are still looking pretty good. So I'm still kind of advising people, you want to own, in my mind, the money center banks, the big ones that have scale to kind of compete if the environment does get more challenged and are less dependent on that interest income, but also have some of the capital markets businesses and things that will benefit if, the recession that I don't think is going to come does not come. I mean, some of those businesses could do well too. So I think it's time to kind of look at the big banks that have scale and are returning a lot of capital.
What kind of valuation discount are they trading at?
Well, I mean, there's two ways to look at it, I think. One would be where are banks trading relative to the market, and they're cheap, but they're not crazy cheap. But if you then take the step to some of the Bank of Americas and Cigroups and the ones I'm talking about here, I mean, you're looking at a multiple or two discounted banks, which are trading a little bit below their historic spot in the market. So I think it's a bit of a stock picker's market for banks.
Okay, and like you said, you like the Citigroups, the Bank of Americas, JP Morgan, the big money center names. Craig, finally, before we go, any other recommendations for investors here if they are thinking about changing their positioning?
We see the broad market as about 20% below our estimate of fair value. So we would expect the market to move higher over the next year, and pretty much the same leadership we've seen for the last 10 years.
So that being?
Consumer discretionary, technology coming back, financials, and industrials.